Welcome to Shadow of Truth, and today is Tuesday, May the 9th, 2017, and your hosts are Rory Hall from thedailycoin.org and Dave Kranzler from investmentresearchdynamics.com. Dave, what's going on?
Just here in Denver living the dream, although I don't know if it's a dream or a nightmare considering what a giant Ponzi scheme the U.S. has become.
It's a dream, my friend. And you know it's a dream because you have to be asleep in order for it to be effective. Or something like that. That's what George Carlin said anyway. Well, we got a lot of gold to cover, so let's just jump in and make it happen.
Let's do it. I mean, the United States is a Ponzi scheme. It's a big, giant Ponzi scheme.
Yeah.
Ponzi schemes work until they don't.
Right. Until the last sucker leaves the table.
Well, no, it doesn't take the last sucker. It's the first one who asks for his money back, and the promoter of the Ponzi scheme can't pay it back. That's when it crumbles.
Well, as Alan Greenspan said, we can always pay our bills.
That's right. But then at some point the currency just collapses because people outside of the U.S. stop taking it. I mean, that's what happened in Venezuela. It's happened in a lot of countries. Yeah, they just they got to print their currency to pay their bill. That's why the EU itself has these Southern European countries by the balls because they can't print their own currency. They need to get bailed out by the European Central Bank. They just can't go and print euros to pay their debts.
Right, and since the ECB takes its orders from the IMF and the BIS, the IMF steps in and says, Greece, pay up.
Well, but I mean, it illustrates the difference between the U.S. and France or Italy or Greece. The U.S. can just print its money to pay its bills. It doesn't have to ask permission from anyone. Do you see what I'm saying?
Yeah. Oh, yeah.
Yeah. And the U.S. government doesn't give anything up when it prints money to create treasury bonds. It doesn't give anything up to the extent that the rest of the world's willing to take its currency. Well, that's changing. At some point, we'll wake up, just like they did in Weimar Germany, and the dollar will be worth a fraction of what it's worth now. I mean, it's only worth a small, it's only worth about 3% of what it was worth in 1913 when the Fed was founded. But at some point it'll be worth a small fraction of that 3%. And 80% of the devaluation of the dollar has occurred since 1971.
That's incredible. That means we've had 80% inflation since 1971.
Well, more than that for a lot of things. I mean, you could buy a Cadillac in 1971 for $7,000. Now there's $60,000-$70,000.
Yeah.
So, a lot of things have devalued even more.
So I was looking at this slide in gold and silver, that's been going on for about 2.5 weeks now, and I was thinking that something is very, very wrong. And something is about to break wide open, that these guys are draining the vaults of all the gold and silver that they can. And that's the reason that these digital prices on the COMEX and LBMA keeps going to the downside, and there's no upside at all, and none even allowed, except for maybe a few hours. I mean, what do you think about that, Dave? I mean, am I just wandering around in the weeds, or is that there's some kind of signal that it's given off, and that's what I see?
Well, yeah, for sure. I mean, but let's put this slide in context. And first of all, in terms of draining the vaults, I don't know about that. I mean, I've seen what Harvey Organ's writing about all these people standing for silver, and yeah. A lot of people, there's been a lot of silver that's been taken for delivery. And I've always meant to keep the data on this. I never have, but it may be partially seasonal. But if you look at, so 20 million ounces have been delivered and that doesn't even mean they've been delivered. They might have been moved from Scotia's unallocated vault account to an allocated vault account for the person who took delivery. So the silver may not have even left the vault. We don't know.
Right.
So, but if you look at it, I mean, there's something like 195 million total ounces. So, 20 million gets someone, 20 million worth is claimed by someone else. Who cares? I don't see signs that a lot of physical is being drained from the COMEX. So, but the other thing is yeah, I mean, this I think what happened is people's expectations were built up based on understanding the reality of the situation, thinking that gold was going to go a lot higher right away. But if you look at where we are, where the front month futures at 12.18, we're still almost $100 above where we were a year ago, less than a year ago in December. So it still had a nice move higher. It just feels like it goes straight down because it's defying the fundamentals and it's defying logic. And yeah, I mean, in some sense, it kind of reminds me of kind of what was going on in the spring of 2008 when that gold hit like a little over 1,000, and then they took it down to 700 by that summer. Middle of that summer, maybe it was September or whatever, I don't remember the exact time frame, but they took down gold 25-30% ahead of the financial system collapse we had. So yeah, ironically, you would think that if there's something bad about ready to happen to the system, you'd think gold would be doing what Bitcoin is doing, going parabolic.
Right.
Instead, it's going the other way. And so, yeah, they could be taking it down ahead of something, and it just could be another manipulation cycle. I mean, we got down to 1,200, and I think we even went below 1,200 intraday, because I don't have the intraday numbers in front of me. But in early October, we were testing 1,200, and then we ran up and we tested 1,300, and now we're back down and we're at 12.18 or whatever. Well, most of the hit comes in the COMEX only when the COMEX is open.
Right.
I mean,
right.
Yeah, the metals sold off slowly overnight, but then they did a cliff dive when the COMEX opened, and that's what it's been. And so that tells you right there, it's manipulation. And we don't know for what reason they're manipulating it. I mean, the banks may have, the banks built up an incredibly large net short position in gold and silver. And I actually shared a table with my Mining Stock Journal subscribers in the last issue, and it's a proprietary table. And maybe I'll put it in the write-up that I do for this show, but it shows that, as a percentage of the open interest, and I did gold. Silver was even worse, but as a percentage of open interest, gold, the net short position of the banks was extremely, they were, not the most short they've ever been, but it was on the high end. And that usually indicates they're getting ready to take the market lower because then they print money. They make profits from that. So this could just be a natural commitment of traders, open interest liquidation cycle where the banks trigger the stop loss sell triggers at the hedge funds who got over their skis on the long side, chasing gold up to 1,300 in the paper market. And now the banks are, forcing the hedge funds to sell because it's all done electronically, and their banks make a lot of money from it. I mean, it's been a money tree for the banks for as long as I've been doing this sector, which is since 2001.
Yeah, they make a lot of money, that's for sure. I mean, the reason that I was thinking that it was a signal that something ominous is on the horizon is because, as we reported in our last show, India and China and Russia are taking on a lot more gold than they have been just in the past few months, and all of a sudden their buying or their acquisitions of gold have just skyrocketed. I mean, they're crazy amounts of gold that these guys are taking on. And you would think that that would do something with the digital illusion called the COMEX and LBMA, but it's not. I mean, we're seeing the exact opposite. So, and what I was saying that people are draining the vault, I'm referring to these people, the folks that have the ability to take tons and tons and tons of physical off the market.
Right, and I think where they're draining the vault is in London, and that's where we saw that hokey PM fix, where they fixed the price $12 below the price of gold where it was trading in the futures market at the time. So, I think there's a problem, and yeah, this takedown could be evidence of that problem. In terms of the physical offtake by the East, as you referenced. This was a comment in John Brimlow's newsletter yesterday. India is headed towards startling Q2 imports, because he reports on India every day, and it's like they're consuming an incredible amount of gold in India right now, despite the attempts by the BIS and the Western central banks to get India to put the brakes on India's imports. I mean, it's snapped back, but it's more than snapped back.
Yeah, they're turning their whatever currency, paper, fiat currency that they have, they're turning into gold. Everybody, apparently. I mean, that's what there was a report that I read, I think over at Shift Gold a couple of days ago, that's what they were alluding to, that all currency, all rupee is becoming gold. Doesn't matter what, doesn't matter how, hook or crook, don't matter.
Well, think about it. If you're ingrained in buying gold, and the government tries to stop you from buying gold, and all of a sudden you can buy it again, you're going to buy as much as you can while you can.
Yes, and since they just mistreated the entire nation, 1 in 7 people on the planet, with their gold, with their currency manipulation. With that whole scheme, that's now backfiring in their face, even worse than before. I mean, absolutely. As soon as the gates came open, I would be right in line. Give me gold. Get me out of this nonsense.
Right, and that's what's going on over there.
So, I mean, that's part of what I was thinking, that this whole 2.5 weeks or whatever it's been, this whole slide to the south on the COMEX with the fix or whatever, that it has something to do with all of that going on, that there's something happening, and this is a signal that says something is very broken and people need to be aware.
That could well be the case, because think about what we're hearing about the coin market here. I mean, demand is dead. So, and sentiment's terrible in the precious metals market in this country. And so if they can stunt demand for even just minted products, which aren't a huge percentage of the consumption of gold and silver on a global basis, but if they don't have to produce as much gold and silver to supply the U.S. public, that means they can take that gold and silver and divert it and send it to Swiss refineries, so that they can deliver gold into China and Asia and India.
Yeah. That could be part of it. Well, what else you got, Dave?
That's really it. Just trying to keep my head above water here, and I think it's important to put everything in perspective.
I think so too.
Literally less than 6 months ago, gold was testing 1,200. Then, in December of 2015, gold was testing 1,100. So, this pullback, it's nasty. But, and it feels nasty because it's so abrupt. And I think part of it is because everyone's expectations rightfully was set at a high level once gold started taking off after the first of the year.
Well, and this is kind of the same play that we saw last year. Gold and silver at the beginning of the year, they were both moving higher and higher, and then all of a sudden, cliff dive, and then they just kind of maintained, and then regained a little bit towards the end of the year, and once again, beginning of this year, off to the races, moving higher, and now kaboom.
May 1st last year, gold was at $12.92. 21 days later, it was at $12.13.
There you go. That's what I was saying. And that was a year ago. So it's the same pattern.
Right. April 16th, gold was $12.89. You know, fast forward 3 weeks, it's at $12.18. So, you know, it's the same type of sell-off that we had at almost the exact same time last year.
This one just feels different than last year, though.
Yeah, because it's obvious now that the fundamentals in the United States are falling apart, and the U.S. is going to have to issue more debt. I mean, I just saw the numbers this morning. There's 2.5 trillion in just auto and student loan debt outstanding now. They both hit a new record again, and there's over $1 billion in credit card debt.
$1 billion or
you're
a
talking
trillion?
about just the consumer alone has close to $4 trillion in debt, and pile on top of that, they're going to have to raise the debt ceiling probably to 22 trillion. So, and not including corporations, Ma and Pa America and the government itself has over 26 trillion in debt. Now, not all that 26 is quite funded yet because they haven't taken the spending from 20 trillion to 22 trillion, but that will happen within the next year, I bet.
I think they're getting ready to here within the next few months.
Well, they're going to have to raise the debt ceiling limit if they pass this budget. They got to raise the debt ceiling. They don't have a choice.
Nope, they don't. Well, Dave, I guess we'll end it there and see what the rest of the week holds, and pick it up on Friday and see where we stand. What do you think?
Sounds good to me.
All right, buddy. Have a good one.
You too.